boy, it's been busy. Let's just talk a little bit about the AI applications and just where you see the wide open space at the moment for Databricks.
Yeah, thank you for having me on. There's so many applications across many different verticals. Lots and lots of customers that are using us for AI and data processing, I should say. Starting with Rivian, for instance, the car maker uses us to optimize the batteries of their electric vehicles. Walgreens uses us to figure out how much should they stock up their inventory and their supply chain. It's super important, right, for them to be able to optimize their prices and lower their TCOs. And then Square or Block, they used to have this app where you swipe your credit cards, but to set that up in a store used to be pretty complicated a few years ago. Now it's super simple because you can use generative AI and just tell it, hey, I have these 5 products, this is the price, and it sets itself up just using generative AI.
So before you were unifying, democratizing data, now it's about the applications of AI, but for that also you need talent, Ali. And I'm interested as to where the next layer of talent is coming from, where you need to hone in on, how you get them on board.
Yeah, I mean, there is a crazy war for AI talent right now. I've never seen anything like it before. I mean, talent war was already crazy last 10 years for software engineers. Now in AI, it's just completely insane. So we are going to use a lot of the proceeds towards that to be competitive. There's a lot of talent, was hired by OpenAI and by Anthropic. What's happened is we've hit this thing called the scaling wall now.
Oh, you think there is a wall, do you? Because Sam Altman's determined there isn't one.
There is a wall. I think it's pretty clear that even those big companies, many of them are now investing in other techniques, not the classic scaling laws. So that actually also has opened up the opportunity where people are now going, there are more companies now that can participate in this next chapter after the scaling wall or the scaling laws. So that's also very exciting times, but you got to pay up for that talent.
You got to pay up. Do you pay up for US talent? I'm going to make it personal, Ali, because you yourself are an immigrant. Originally Iran, moved over to Sweden, come over to the United States. And I'm interested as to how much you look abroad, particularly in the context of the next administration.
Yeah, no, look, not because of the administration, but when there is this crazy talent war going on, you of course start looking at, where could we go where it's not so intense, right? Where the competition is not so intense. So we look everywhere. I think Eastern Europe is super interesting. Very smart people that live there, and it's just different. You don't have that intensity of a competition around the talent. Europe, and of course Asia, many locations. So we're looking at all of those. But still, you don't want to ignore Silicon Valley or United States. It's still where you have the highest talent density. It's absolutely necessary. So we're going to compete here as well.
Is it about acqui-hiring? I mean, you've been acquisitive, and some of that in the ML space, Mosaic ML, for example, some of that in the data side, Tabular, for example. Are you going to make acquisitions because of the people or because of the products being built?
Well, both. There's 3 things you could get. You could also get revenue, right? But there's a lot of startups that started, super talented people, amazing IP, but they quite didn't get to the revenue. So it's, 2 birds with 1 stone. You get that talent, and you get the intellectual property. And in this race, you need that, right? You need both of those things. So absolutely, we're going to actually double down on that even more now that we have this funding.
It's a race, but it's also a race versus your competition at the moment to be getting those clients. Who are your key competitors? Because I know on LinkedIn, you've been throwing some shade at Snowflake, for example. We all think about Microsoft. Are they the 2 competitors for you?
With Snowflake, I would say that was in previous years. I would say a couple of years ago, we were really intensely focused on competing with them. Now in this AI era, that's kind of shifted. And Microsoft is a super important partner. In fact, Microsoft, Amazon, and Google are investors in Databricks. There is some competition. They have products that sometimes compete as well. But all up, those companies, the majority of their revenue in the cloud is storage, compute, networking. And that might be 70% of their revenue, I'm speculating. And we're a killer app for that. We drive so much storage, compute, and networking. In fact, we drive close to 30 million machines in the cloud every day that we launch. So we're super close partners, and they love us as customers, and vice versa. But there's that little competition happening as well, and probably that's going to expand over time as AI is becoming more and more important.
I guess one big game of frenemies out there when it comes to technology. Ali, I'm interested in particular when you're thinking about how you're raising money. 10 billion is a lot. Thrive Capital front and center there. You've also got who's who of other investors with A16Z, for example. What's interesting is you're also going to the debt markets, we understand. How is that going? Because that seems to be trying to offset the tax implications to keep your employees happy.
Yeah, I mean, that's a great point. I think let's take them one by one. Let's take the equities. The equity raise for us, it's super important to get partners that are long-term oriented. We want investors that are going to say, we're going to be with you probably 10 years, 20 years. This is a great price. We'll buy again more, and later in the IPO, we'll buy even more, and we'll stick, to your plan, and we'll let you implement that long-term vision and not become too short-term oriented, the 90-day quarterly sort of mindset. So that was the thing we optimized for, and we were pretty picky. We had 19 billion of interest in this round, and we basically cut people back to half of that, and we said no to most investors. And then on the debt financing, that makes a lot of sense as well. If the company is growing in valuation so much, then actually you're better off just getting a big loan, even if interest rates are high and you're paying, let's say, just make that number round number, 10% interest on that. You're better off taking that as a loan and paying that back in a few years, because you can pay that back in equity then, and presumably the company has doubled in valuation. Let's call it in 2-3 years.